Hello, and welcome to your Daily 5. My name is Greg Harmon. I'm the founder and president of Dragonfly Capital Management. Dragonfly Capital is a asset management firm located here in the Cleveland area of Ohio, where we run separate accounts for clients using technical analysis to find ideas and then option strategies to execute them and deliver on performance to clients. We also, for those that want to do it on their own, sell a newsletter that you can get more information about at dragonflycap.com. Today, as we head into the new year, briefly into the new year, tomorrow is our first big piece of data with the CPI report. I thought we might take a look at some monthly charts and look at the macro view into 2023 to get a feel for what might happen in the market. Now, recall the backdrop here is that we've got another Fed meeting coming up in early February. The Fed has raised rates to 4.25%, and the market is expecting that they'll go as high as about 4.9%. And then the market is expecting that the Fed will have to start cutting rates due to a recession later this year. So that's the narrative that's going on in the background. With this narrative, the first chart I wanted to take a look at is gold. Gold, here we've got a chart going back to a monthly chart going back to 2000. And you can see that I've put the Fibonacci retracement levels on here for the big run from the 2001 low up to the high in 2011 that took it up to 1924. It then retraced 50% of that value into 2016 before bouncing around for a little bit into the time prior to the pandemic, and then post-pandemic started taking off. We had here in 2020 a new high over $2,000, a pullback into some consolidation here that was happening just above the prior highs from 2011, 2012, and then a retest of that top into 2022, early 2022, before a sell-off. The sell-off confirmed a double top as it passed through the bottom here, and then found some support when it hit its 50-month moving average. When it hit the 50-month moving average, towards the latter half of last year, we've then had 3 months of a move higher. And beware, this last candle here is only, this is January, so it's only a 10-day candle. But we've had a move higher now. We're now approaching back to this this level of, I would call it about 1920, 1925, 1915, somewhere in that area. That if gold can get above that level, we might see a new all-time high in gold before the year's out, given this backdrop of cutting, raising rates, cutting inflation. Gold is looking like it's a buying opportunity right now on a long-term basis. The second chart I wanted to take a look at is oil. There's a lot going on in the oil market, right? So this chart goes back to the 1990s, and we see right in the middle of the chart here, this bullish harmonic pattern that played out the two triangles here in the retracement of almost 50% of the market, the move within that range before it started stair-stepping down. And we had that 2020 level that doesn't show it here as negative, but where oil prices went negative on the close of the contract year in 2020, before a massive run higher, which was set up to be a combination of inflation-induced returns, as well as the war between Russia and Ukraine. We've now seen that top off, and you can see here we've had a lot of movement lower since around the middle of 2022. but we're starting to get some support here as oil falls back and finds its 200-month moving average. And that 200-month moving average has been support for the last couple of months now. It's touched it a few times and bounced back off of it several times. Momentum is continuing to fall, but it's still in the bullish range on both the RSI and the MACD. So what's happening here with oil? Are we going to see a crush down and a breakdown below this prior 2018 high? Or are we going to see a bounce here after hitting support and moving higher? There's some factors going on that support a further move higher here. The reopening in China giving you more demand for oil. We've got the SPR having been drained and now talk of reloading it. Those are both positive factors for increasing oil prices. And I just saw a analyst call this morning from Goldman Sachs saying that they see $110 by the end of the year. So if it gets over $80, $82 a barrel, maybe we do see that reversal. Right now, the trend is definitely down, but we're starting to see some support. The issue that's been driving the market since 2021 has been the strength of the dollar. And you can see here that I've separated the dollar since 2000, since 1999, 1998, into some 7-year channels here. And we had the one channel from 2002 to 2008, where the dollar was weakening the whole time. Then we had stability in the next channel, a bump up early into the third channel here, and consolidation that continued into the current channel. But generally, a movement higher in the dollar and a fallback now to retest this channel area that had been in place from 2014 to 2021, or into June last year, where it broke out here. So the question for the dollar then is, will it continue to hold up here, or will it continue to break down? A breakdown would be a positive for the markets. A reversal back higher, showing strength in the dollar, has tended to be something that's been difficult for the markets recently. So what is going to drive this movement in the dollar? Look towards the Fed policy and interest rates. If the market is right about the Fed having to cut rates in the latter half of 2023, we probably see this continue to go back lower, and maybe we even get down below 100, which takes us to the markets that we're all investing in. And the next chart I have here is the Nasdaq 100. And you can see the Nasdaq 100 going back to 2004 here. I didn't put it on the chart because it just starts to get a little crowded in terms of the candlesticks. But these Fibonacci lines here take us back to the 2001 high at 4,800. You can see we had a retest of that and some consolidation of that in 2015. And then it's been generally a march higher up until the end of 2021. Since then, from the 2009 low to the 2021 high, the Nasdaq 100 has retraced 38.2% of that move, and has been bouncing off of that for the last 4 months. Are we going to continue to see more of this here? It looks like that's likely. It's also looking kind of vulnerable with the RSI holding up here just barely into the bullish zone on the long-term basis. For me, a move below 40 would be into the bearish zone. And with the MACD turning negative, I'd say that the Nasdaq is vulnerable for more downside here. So a move below this 10,750 level, maybe down to 10,500 or so to be certain about it, probably brings into the possibility of a pushback to the 50% retracement level at 88.90 or around the 8,900 level in the Nasdaq 100. Final chart I have for you is the S&P 500. And you can see that this goes back to 1990. We had a nice run up in the 90s into the dot-com crash, the consolidation range that happened basically on a long-term basis up until 2013. I've put the Fibonacci retracement levels on here from the 2009 low up to the high in 2021. And you can see we haven't come close to touching 38.2% retracement of that yet. We're starting to see Bollinger Bands open up to the downside. We're starting to see momentum kind of gather here just above that 40 level again. But as the price levels in the retracements have been better in the S&P 500, so has the momentum and the MACD and the S&P holding here in positive territory. And really just a massive reset from this huge move up to the 400 level, back down here to 50. So still quite positive. The S&P 500 here looks like it's, if we're going to get a turnaround in the market, it may be one of the leaders that shows that turnaround in the market because of the strength that it's had and not falling back so far. So look for the S&P 500 if it gets over 4,100 to start making a move to the upside, and confirmation that may be found from the Nasdaq 100 moving back over 12,000. That's my daily 5 for today. Thanks for watching.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.